which maybe sounds great, but when you compare it to the past quarters, it was 24% the quarter before and 131% the quarter prior to that. I personally have never shopped on Temu.
I have never either.
I can tell. Considering.
How do you know?
You don't know how to say it.
Oh, right.
But I'll say neither do I.
You don't have to know how to say it to shop there, though, right?
That's true.
But there are people who really like it.
They do, because you can find really, really cheap
stuff.
Yes.
Yeah.
Like
That's why
really
there's
Cheap meaning inexpensive.
Inexpensive, right?
Some people would argue that you can find a quality difference too.
Yes.
With certain items.
I think so.
That's why there's like the whole meme of like, you know, a doppelganger being like a Temu doppelganger or something, right?
Here we are, the knowledgeable sources who have never actually shopped there.
Yeah.
Yes,
But I just know the internet culture.
Yes, I know.
Transparency on the president's social media site.
That's another one that I'm watching today. This one is super interesting to me. It's Trump Media and Technology Group, ticker DJT, and shares are down about 10% today. That's the company behind Truth Social, as you just mentioned. And what they said today is that they're going to be selling around $1.5 billion in stock and $1 billion in convertible bonds to buy Bitcoin for their treasury. So that's a growing trend of companies within the US, but also abroad, that are adding Bitcoin to their balance sheets. Obviously, the reaction from the market, shares are down today, but this is really interesting to me because it's Michael Saylor and the formerly known MicroStrategy that really created this trend during the pandemic, and now it's growing into this big thing just because strategy itself has done just so tremendously well with the strategy, if we can say.
I mean, it's raising a bunch of money.
It is, and then it's going to use that money to buy Bitcoin. Like Michael Saylor does. I think some other companies have done this too after Michael Saylor sort of pioneered this. Works really well to be a leveraged Bitcoin bet when Bitcoin is going up. We'll see how this stuff works if Bitcoin falls again.
We will see, but you know what? Strategy, let's just call it MicroStrategy, just for the sake of this conversation. MicroStrategy, shares are up something like 27% year to date, way more than Bitcoin is up, way more than almost all crypto ETFs or Bitcoin-tied ETFs, way more than the 2x MicroStrategy ETFs. So whatever Saylor is doing, others are definitely trying to replicate. It's just that the market might not be reacting to it the way that they might want.
But what's really cool, right, is then you're now... cool, I use as a kind of throwaway word, interesting, is that then part of the value will be the Bitcoin it holds, right? And as you mentioned, Tim, when it's going up, yay, right? But when it's going down, maybe not so much.
We'll see if it ever goes down again.
I mean...
I have no idea.
MicroStrategy, $101 billion market cap company.
Up from $1 billion in 2020 when Saylor first came up with this plan.
It's pretty wild, right?
Yes, yeah.
Hey, before we let you go, you're watching Apple. What's going on?
Yes, one more stock that we're looking at. Apple shares are snapping an 8-day losing streak, so up some 2.5%, 3% today. So some relief for the stock, but we do still have all of those tariff concerns weighing on the company. We have those escalating attacks from the White House that are threatening to further erode the company's profit outlook. We had President Trump at the end of last week saying he would be he might be willing to impose a levy of 25% on the company's products if they don't shift iPhone production to the U.S. Obviously, it's a theme that we've heard quite a bit about in recent months, and we have some analysts saying they're skeptical that this threat will come to pass, but still, it has been weighing on shares of Apple.
Apple now 20% to the downside here, year to date in 2025. Interesting stuff. Good roundup of stocks. Bloomberg News cross-asset reporter Vildana Hyrick joining us right here in studio. Hey, for more conversations, check out our Stock Movers podcast, 5-minute episodes, biggest winners, losers. Listen to Stock Movers on Apple, Spotify, or anywhere you get your podcasts.
Coming up next on Bloomberg Business Week Daily, if you're sticking with us on radio, YouTube, and originals, Mark Zuckerberg's pivot to Trump, the latest on the president versus Harvard. And yeah, we're going to cook with the CEO of Omaha Steaks.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Cammie McCormick. A U.S.-backed group opened an aid distribution center in southern Gaza today, and there was chaos. At the UN, spokesman Stefan Dujarric.
We have been watching the video coming out of Gaza around one of the distribution points set up by the Gaza Humanitarian Foundation, and frankly, these these images are heartbreaking to say the least.
Witnesses claim that at one point Israeli forces started shooting. Some people scattered, others remained, desperate for food and medicine. The Trump administration is moving to cancel all contracts with Harvard in the latest escalation of the dispute between President Trump and the nation's oldest university. CBS's Nancy Cortez.
The president of Harvard University said, yes, we have problems. We want to address them, but terminating these research contracts and grants that benefit the entire country when there are major medical breakthroughs, scientific breakthroughs, he argued that that doesn't help anyone.
CBS News has obtained a State Department cable dated today and signed by Secretary of State Marco Rubio, noting the administration is expanding screening and social media vetting for foreign students applying for visas to study in this country. NPR has filed suit against the administration. Stacey Lynn has that.
They're suing the administration for trying to strip their federal funding, calling it illegal and a violation of the First Amendment. The president has argued that NPR and PBS don't deserve the money because he says they're biased.
President Trump lashed out on social media again today against Vladimir Putin, saying the Russian president is playing with fire. CBS's Imtiaz Tayeb.
President Trump is growing frustrated by Vladimir Putin's continued attacks on Ukraine and the slow pace of these peace talks, and is now reportedly eyeing sanctions against Moscow. But the real concern is that he is also reportedly considering abandoning the talks altogether if this final push for a ceasefire does not work.
CBS's Kelly O'Grady says the latest consumer confidence report was better than expected.
People are feeling better. Notably, a lot of the survey responses in this month's report came after that May 12th date. That's very important because that's when we saw the pullback with China, that they were coming to the table and saying, hey, we think a deal is going to get done. We're going to pause a lot of these tariffs.
On Wall Street, the Dow Jones Industrials have been up all day long currently, higher by 713 points. This is CBS News. Spellers from around the world gather just outside Washington today, as Jennifer Kuiper reports.
Scripps is celebrating the 100th anniversary of its National Spelling Bee. 243 students began sounding out to themselves and saying aloud some difficult words. Scripps Spelling Bee Executive Director Corey Leffler says this contest sets up kids for a great future.
By learning this skill, but also learning to study, to set goals, to bounce back from disappointment if you don't win.
The Scripps Spelling Bee runs through Thursday. Jennifer Kuiper, CBS News.
Scientists announced today they have discovered the earliest evidence of humans using whale bones. They found the weapons made of the remains of the massive creatures dating back more than 20,000 years. They were found off the Spanish coast, and scientists say they offer proof we've been underestimating our prehistoric ancestors, especially when it comes to how they interacted with the marine world. I'm Cammie McCormick, CBS News.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenovec. Live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, we are 55 minutes away from the closing bell on this Tuesday. We've got definitely a rally underway when it comes to U.S. stocks. I'm looking at the S&P 500, Tim, and 475 names to the upside. So you're seeing fairly broad-based rally, at least maybe some concerns about trade tensions easing between the EU and the U.S. There's a couple of different dynamics going on. So, yeah, some upbeat sentiment, to say the least.
One of those companies that is higher is Apple. Shares snapping an 8-day losing streak. Mark Gurman's going to be joining us in just a minute. And speaking of tech, Carol, Mark Zuckerberg has been pivoting toward Trump. The question that I have, the question that I think today's Big Take asks and answers pretty well is it working?
Yeah, it's a great question. So we're going to talk about that. Also, we're going to get the latest on President Trump versus Harvard. And let's get cooking, everybody, because the CEO of Omaha Steaks is going to be with us. We got lots of questions, including an interesting ad campaign that they've had.
Yeah, you guys were all over this one this morning. I was like trying to work, and I was like, can you guys stop talking about... Well, I'm not going to give it away.
Don't give it away.
It's pretty good, suffice it to say.
Thank you, CC, for bringing it to our attention, one of our producers.
All that and more coming up over the next 2 hours right here on Bloomberg Business Week Daily. First up, though, a check of the day's trade and top business stories. Here he is, Charlie Pellet.
Hi, thank you very much, Tim. Here's what's going on. 54 minutes to go ahead of the close. The Dow, the S&P, NASDAQ solidly in the green. Yes, off session highs, but still very close to the best level of the day. With the S&P now up 114, that is a gain of 2%. Dow Jones Industrial Average higher now by 723 on the Dow, a gain of 1.7%. NASDAQ up 431. For NASDAQ, that is a gain of 2.3%. Our Mag 7 index up now by 2.9% with the 10-year, 4.42%. The 2-year, 3.96%. Gold down 1.2%, 33.04 the ounce. West Texas Intermediate crude down 0.9%, 60.96 for a barrel of WTI, and Bitcoin right now up 0.2%, 109,829 on Bitcoin. Stocks are rallying as consumer confidence rebounds sharply and the U.S. and EU speed up their trade talks. Federal Reserve Bank of Richmond President Tom Barkin says elevated uncertainty has led businesses to freeze hiring and hold off on future investment decisions.
I've been describing this as driving through fog. It's just very hard to drive when it's really foggy, and businesses are afraid to accelerate because they don't know what's around the next curve. They're also afraid to put on the gas because you don't want someone crashing into you. And so, by and large, they're pulling over and putting on the hazards.
Richmond Fed President Thomas Barkin. You can watch the full conversation on YouTube on the Bloomberg Podcast channel. Recapping, S&P up now by 2%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. Apple shares today snapping an 8-day losing streak, higher right now to the tune of 2.6%. We got tariffs. We got Tim Cook. We got Johnny Ive. Needless to say, there's a lot of pressure on the company, a lot that Tim Cook has to focus on. We were dying to talk to him on Friday, but he was out of the office. Mark Gurman is Bloomberg News managing editor for Global Consumer Tech. He joins us from the Los Angeles bureau of Bloomberg News. Mark, I want to, we thought of you on Friday because of the president's post to social media that said that kind of predictably what we've been talking about, the fact that US-bound iPhones being made in India is not being made in the United States. The president not happy about that. I just want to get the view from you one more time about how you think that Apple is going to navigate a situation such as this, short of building the iPhone here in the US.
Tim, it feels like Groundhog Day almost every day here.
It does.
Where Trump comes out and says something related to him being unhappy that the iPhone is not produced in the U.S., and I come on here and I say the exact same thing I said a week ago, which is the iPhone cannot be produced in the U.S. I don't anticipate that happening in the next decade. I don't anticipate that happening during the period in which Donald Trump is in office. It's just not feasible. Such a switch would take years. Such a switch would increase costs. In fact, that 25% tariff that Apple might be getting because they don't make the iPhone in the US, that's a steal compared to what they would have to pay financially and in so many other areas of their business to relocate production of the iPhone from Asia to the US. So Apple's getting a good deal here, I would say. Not that they should have to pay that tariff, that's not up to me to decide, but looking at the financials, it's not a bad price to pay. The other thing I'll say on this topic is we've seen a bevy of analysts and others chime in over the last few days, repeating the same ideas about what an iPhone would cost if it were built in the US. Let me tell you this. They don't know how much it would cost. Even Tim Cook doesn't know for sure how much it would cost. Because until you're making those devices at scale, until you figured out exactly how you're going to build them in the US, you don't know what it's going to cost to build them in the US. So someone might throw out $3,000, $5,000. Who knows? There's no way to know.
We don't know. I do want to point out that even though the post on social media Friday morning specifically called out Apple, the president was asked in the Oval Office later in the day whether or not it would apply to other companies that make these electronics outside of the U.S., Mark, and he did essentially say, yeah, it would apply to everybody. So then Samsung would get hit by this as well. So it's not just Apple. Certainly Apple's the focus, but it's every handset maker that would face this challenge too.
This is actually a really important point, and it's, I think, much more important than anyone has realized. When Apple was able to bypass tariffs during the first administration, the way they did that is Tim Cook argued, I'm told, to Donald Trump that all that would be happening here is an America-based company, right, Apple's based in Cupertino, would be getting destroyed, right, on tariffs, whereas Samsung and others who are Apple competitors based in Korea and China and elsewhere would just run free, right? And so what you have to understand is Donald Trump is there responding. That's Donald Trump's response to Tim Cook saying, oh, don't worry, Tim, I'm going to do this to everyone. So everyone's going to feel the same pain that you're going to feel.
How angry is Tim Cook right now? Right? He was at the administration.
I have no idea.
Well,
my sense of how angry Tim Cook is right now is the same sense that people have who are saying how much an iPhone built in the U.S. is going to cost. I have no idea how angry it is. I'm sure he's not pleased. I'm sure he's dealing with a lot, but I don't know exactly how angry he is. I would guess that he realizes that the 25% tariff in the grand scheme of things could actually be a lot worse.
Well, what I'm curious too, though, Mark, is does he have still the ability to, like, pick up the phone, call Donald Trump, the president,
sure,
and really talk to him and have an open conversation back and forth? Yeah. I guess I'm trying to gauge what the relationship is.
Yeah, he met with him last week, and then this happened 2 days later. So, you know, my guess is that originally Trump wanted a much higher tariff. Originally, he was going to put something closer to what those original China tariffs may have been, and they sort of worked together to whittle it down to something like that 25%. Because in my view, that 25% is pretty good. Like I said, that's cheaper than what it would cost Apple to actually relocate production, right? And so really, it's a loss, but it's sort of a wipe your hands moment. It's kind of a win for Apple at the same time, too. And, you know, the day is still young. We have till the end of June for this to actually come into practice. You can bet there's going to be a lot of lobbying, a lot of negotiation, a lot of things between now and then that get Apple a lower percentage. And as we've talked about before, I think there are levers Apple is going to pull to make it seem like they are doing more in the U.S. Trump needs something from Tim Cook. He can get something from Tim Cook. He can take something from Cook, take it to his base, take it to whomever and show that I got Tim Cook to fold. I got Tim Cook to do something in the U.S. No one else has been able to do that, right? The question is, what is that something? We've talked about different things here. We've talked about packaging. We've talked about final assembly of more components. We talked about more R&D. So far, all they've announced is AI servers, which, by the way, it's sort of, they're not really building them here. They're sort of doing final assembly, some exterior packaging and whatnot. In terms of the metal frames that go around the servers, we're not doing a ton. But Apple will, I promise you this, they will come up with something this year, right, to make it seem like they've moved something significant in order to get that tariff reduced or removed.
I mean,
you'll see.
Is there anything smart in terms of a conversation, Mark, that we can think that, Trump understands this is a massive company, often trading places with NVIDIA being the world's largest market cap company. But there's a lot of headlines. We've got, the Journal saying bad year for Cook keeps getting worse. You've got the Times saying text Trump whisperer Tim Cook goes quiet as his influence fades. And you are on it, and the team are on Apple in terms of the things that are coming at the company from multiple, avenues. I mean, I don't know. Ultimately, do we have to be worried about kind of the future of the outlook for this massive company and really important company?
Yeah, as I wrote in Power On 4 weeks ago, well before that Wall Street Journal story, they're taking it from multiple angles right now. Tariffs, competition issues in many parts of the world. You have the innovation question. You have this partnership between OpenAI and Johnny Ive. You have app developers who are unhappy, and obviously the app developer business is a big business for Apple. App business alone is $20 billion, right? You have the Google search deal falling apart. So right now is a critical juncture for Apple. It's one of the most trying periods in the company's history. The silver lining is that the fundamental story is still good. People are still subscribing to services. People are still buying iPhones, right? But you think about the future. You think about what is really the future product of this company, and that answer is a lot less clear. And I think one smash hit changes the whole narrative.
Hey, Mark, we only have a minute and a half left, but I want to hit the lead of your Power On column from Sunday. And it's all about Johnny Ive and Sam Altman and the big news last week. And I've been wanting to talk to you to ask you the simple question, what does this reflect about Apple?
Well, Apple no longer was a place conducive to Johnny Ive and his desires for how a company should be run or how central design should be to the company's processes. Obviously, Apple had their own concerns with Johnny Ive as much as Johnny Ive had concerns with Apple, right? But it was an unfortunate parting of the ways on both sides, so to speak, that led to a point where he had to find another company, another soulmate, so to speak, that he wanted to partner up with to marry his design with the underlying technology. And he ended up finding a company in OpenAI that is the one company that has the technology that could really jettison what Apple's offering here, right? It's not like he's teamed up with Samsung or Google or Meta. He's teamed up with the company that has the most exciting technology in the world, a company that Apple executives have already acknowledged has the goods to potentially upend the company's flagship phone business, right? That's why it's pretty scary in particular. Now, nobody says this Johnny Ive OpenAI partnership is going to be a massive success. In my opinion, I think it will be successful, and they're going to come up with cool things. I don't think immediately, though, it's going to destroy the iPhone. But this is a massive wake-up call and should send California-sized earthquakes down Apple's spines for them to figure out what that next big product is to really compete in this new age of AI hardware.
Happy Tuesday, Apple. Mark Gurman, thank you so much. He's Bloomberg News Managing Editor for Global Consumer Tech out there on the West Coast. Coming up, we shift our gears. We're talking Mark Zuckerberg.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks higher across the board. This Bloomberg Business Flash brought to you by ShipStation. Calm the chaos with the shipping software that delivers. Use code Bloomberg for a free trial at ShipStation.com. That's ShipStation.com with the code Bloomberg. The Dow, the S&P, NASDAQ are all advancing. 39 minutes to go ahead of the closing bell. S&P right now advancing by almost 2%. The Dow up 697 points, up 1.7%. NASDAQ up 426, up 2.3%. And the Bloomberg Mag 7 Index up now by 2.9%. 10-year at 4.42% with a 2-year 3.96%. Gold down $38 the ounce, down 1.2%, 33.05. And West Texas Intermediate crude down 1%, 60.92 for a barrel of WTI. Bottom line here, stocks are rallying as consumer confidence rebounds sharply and the U.S. and EU speed up trade talks. But what about the Federal Reserve and all those tariffs? Victoria Fernandez is Chief Market Strategist at Crossmark Global Investments.
Say we get clarity on tariffs at the end of the first 90 days, which puts us, early July. That already puts us into October at the earliest for the Fed to make a decision. So it is pushing its hold time further and further out this year, and that's going to have to start getting priced out of the market more and more.
Crossmark's Victoria Fernandez interviewed this morning on Bloomberg Open Interest. Salesforce has agreed to acquire Informatica for about $8 billion, barely a year after an earlier effort fell through. Salesforce, based in San Francisco, up 1.5%. Informatica up by 6.1%. For on-demand news, 24 hours a day, subscribe to Bloomberg News now, wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. Carol, I want to talk about Mark Zuckerberg.
Okay.
He's one of the wealthiest people in the world.
Yes, indeed.
He heads up Meta Platforms. Do you know this?
Are you mansplaining to me? What the heck is this about?
All right. Do you remember last summer when he told Emily Chang?
Wait, is that a season, Tim?
That then candidate Donald Trump's reaction to an assassination attempt in July was, quote, badass?
Yes, he was very into it.
He also called him personally on several occasions last summer and even bashed the Biden administration in a letter to Congress. Once the election results were in, Zuckerberg sprinted Trumpward. So writes Bloomberg News technology reporter Kurt Wagner. In Bloomberg Business Week, and it is today's big take, it is just the tip of the iceberg when it comes to what Meta Platforms has done in recent months, including settling a lawsuit, making changes to its board and executive ranks, and more. Kurt Wagner is also the author of Battle for the Bird, Jack Dorsey, Elon Musk, and the $44 billion fight for Twitter's soul. He joins us now from Denver. Kurt, this is a great piece. I encourage everybody to read it. I want you to we're going to answer the question in your view about whether or not the charm offensive is working, but talk a little bit more about the changes that you've seen personally from Mark Zuckerberg and professionally from Meta Platforms over the last year or so.
Yeah, I'll start with the Meta stuff. You mentioned some of it, Tim, right? They're rolling back DEI efforts. They're changing their speech policies. They eliminated their fact-checking team, kind of doing a lot of the things that I think President Trump would want the company to be doing if he was in charge, right? Like those are the types of things that angered him the most the first time he was president, when he would get a fact-checking label on one of his posts, for example. And so we've seen a number of things that the company's doing. And then with Zuckerberg personally, he showed up at the inauguration. He co-hosted this black tie fundraiser a reception for the president on inauguration night. He keeps showing up at the White House. He goes to Mar-a-Lago. We've even seen him sort of adopt some of the Trump language when it comes to the media. He appeared on, the Theo Vaughn podcast, the Joe Rogan podcast. Like he's just sort of embracing this right wing or right of center group of people who have historically been Trump supporters. And so all of these things combined led us to this question of like, is this the real Mark Zuckerberg finally sort of unleashed? Or is this some type of savvy business decision? Is this a business strategy that he's trying to employ? And I think we landed on the latter. Like, I think this is a guy who is very finely tuned to self-preservation, to trying to make sure he and Meta succeed. And if that means cozying up to the president, regardless of his personal views, I think that's what we're seeing happen here.
Was it like eat your prey or be eaten or something? like you wonder what's going on. Yeah, it's fascinating. I love in the story just like showing how much travel, right, that Mark Zuckerberg has done to whether it's Mar-a-Lago or wherever President Trump is. Just give us, size and scope. That's what we're about at Bloomberg. Give us an idea of how much interaction, physical or telecommunication, that Mark Zuckerberg has had with either candidate Trump or President Trump.
Yeah, I think he's going basically from, the West Coast in California, or even sometimes all the way from his home in Kauai, right? So an additional 4 or 5 hours of flying all the way to the East Coast. I think about twice a month on average, right? So I think he's been to Mar-a-Lago twice. I think he's been to the White House maybe 4+ times. A lot of these trips are specifically to meet with members of the administration, if not Trump himself. And, the party line from the company is always, hey, we're talking about AI leader and tech leadership. That's sort of like the blanket statement we get when we reach out to them. But what we've learned is it's not just talking about AI. It's like hammering home, hey, here's what we really want with regards to AI regulation. And then JD Vance, the vice president, going out and basically sharing that same message with European regulators a few days later. And so I think what makes this so important as well is that this is not a relationship that he had with the prior administration, right? The story gets into, and we can talk about this, how contentious the Zuckerberg-Biden relationship was. So I think the fact that he has someone willing to, let him come to the White House and lend a listening ear is just half the battle for him, just to get back into that room that he was locked out of for so long.
What was it like with Obama? What was it like with George W. Bush?
Yeah, well, with Obama, Zuckerberg was 24 when Obama was elected. So very young. Facebook was very young. And you probably remember, like, Obama was really that first president, U.S. president, to embrace social networking and the idea of campaigning on Facebook and using that as a tool. So the relationship there was pretty good. You probably remember the relationship with Trump 1.0 as not being very good, right? He was constantly accused of censoring Republicans and conservative bias. Ultimately, Zuckerberg banned President Trump from Facebook and Instagram after January 6th. So, you would think, well, it can only go up from there. But the Biden situation was perhaps the worst of all. There was just Joe Biden really had no respect for Mark Zuckerberg. He blamed the company for a lot of kind of things that were going on in the world, including COVID misinformation and vaccine misinformation. And so the relationship just deteriorated to a point where there really wasn't one between at least Zuckerberg and Biden. I think their teams talked quite a bit. But, when Trump gets elected again, it's a chance for him for a fresh start, if you will. And I think that's what he leaned into.
You spoke with more than 50 people, some of whom actually did speak to you on the record in the sense that you did quote them, some of whom remain unnamed due to considerations of anonymity here and backlash. But Kurt, I'm wondering what you learned about where Mark Zuckerberg is politically, or if this is purely business.
I walked away feeling that this is more business than personal politics, but at the same time, it sort of shows you that he's willing to kind of throw out the things that matter to him, or what we thought mattered to him, if it helps him, situate his business better. And so what I mean by that is, take CZI for an example. That's his philanthropy, the Chan Zuckerberg Initiative. Historically, this has been an organization that funds, prison reform, social justice reform, immigration reform, like things that we would oftentimes associate with the political left. And they have really backtracked on almost all of that. They're focusing primarily on science funding now, and they're getting rid of a lot of that social justice related stuff. And you would sit here and think, okay, well, that puts him in a better position with President Trump. But what does that mean? Like, did he ever care about those things to begin with, or is that simply just a convenient way to sort of spend his money? And so I think I walked away thinking, okay, he's doing this for business reasons primarily, but I also have no idea what his personal politics really are, because he seems to adjust those things based on who's in charge.
All right, got to leave it there. Hey, listen, a great deep dive, and so appreciate it. Kurt Wagner, senior technology reporter covering social media here at Bloomberg News. Check out his book, too, Battle for the Bird, Jack Dorsey, Elon Musk, and the $44 billion fight for Twitter's soul.
Hey, we got to talk U.S. Steel here, because the U.S. government is poised to receive a so-called golden share in U.S. Steel as a condition for approving Nippon Steel's proposed acquisition of the American company. Josh Wingrove wrote the story with Joe Doe. Josh is senior White House correspondent for Bloomberg News. He joins us from our Washington, D.C. bureau. Josh, I want you to remind everybody about what President Trump said on the campaign trail about a takeover by a foreign company of U.S. Steel.
Yeah, it wasn't this. And hello, welcome to the panel, guys. Always a pleasure to have you
Good
here.
to see you.
Yeah, Trump campaigned against this deal pretty emphatically over and over in Pennsylvania, one of the most crucial swing states, not only for the presidency, but they flipped a Senate seat there, Republicans did. And so he was against this deal as Biden sort of hemmed and hawed about it. Remember, there was sort of a union politics angle to it for Biden, which isn't quite the same for Trump. So, fast forward a couple of months ago, he starts kind of opening the door to maybe a minority partnership, this and that. But Nippon Steel and U.S. Steel have both been jointly pressing for this to go through. And remember, it was sort of stuck in a CFIUS review process and a legal fight over that. So Trump's surprise announcement on Friday that there was going to be some sort of partnership was definitely, a retreat from some of the rhetoric from before. What they are pointing to is that there will be some measure of U.S. control in this, and that Nippon Steel has raised its investment pledge to go along with the actual purchase price, and they'll, I guess, tout those two wins. And this golden share thing is where that comes from. We think, we don't know, but it seems like it is more about veto powers over, for instance, the board and that kind of thing, rather than, an actual equity stake. But things are fluid, but it looks like this deal is certainly looking better under Trump than it was in the campaign. Let's put it that way.
All right, Josh, looking better, but my spidey sense is going off. So is this a case of nationalization of a company, small steps? Is this potentially a move towards this becoming a state-owned entity? Like, it just feels a little strange.
Yeah, I mean, we've seen people have been sending us all kinds of things on golden shares all day. And so this is something they've done in Europe. It is let me back up. I guess when you go through a CFIUS process, you get what's called a mitigation agreement, technically a national security agreement. A lot of companies have this already in the States.
Okay.
If this is just a beefed up version of that, then it is sort of drawing from precedent pretty heavily, even though it might be one of the strongest mitigation agreements we've seen. This gives, the government the power to demand documents, basically knock on the door and go into some of these companies. For instance, if you've got a technology company that's been bought by a Chinese state-owned enterprise, this would be kind of a not unusual, even normal thing to have. So if that's what we're talking about, and they're just sort of branding it as a golden share, then it's not unprecedented entirely.
But the term golden share, is that from this administration, or is that I've never heard it before. Does that...
It is a thing in Europe. Senator McCormick, the guy who I mentioned flipped that seat in Pennsylvania in that very election, has been something of a point person or interlocutor between all the various stakeholders in the Trump administration on this. He sort of said that this was something proposed by Nippon Steel.
Okay.
So he's indicating that this is something that they proposed. The administration likes it. Trump gets to say there's American control, and we'll see when they dot some I's.
Josh, thank you. Josh Wingrove, Bloomberg News senior White House correspondent from our Washington, D.C. bureau. We drive to the close after this.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We got stocks holding very close to session highs right now. The Dow, the S&P, NASDAQ solidly in the green. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks with an aggressive bid today, helped by trade optimism and consumer confidence data. Dow's currently up 700 points. S&Ps are higher by 1.9%, and NASDAQ gains 2.3%. The U.S. 10-year yield is at 4.44. Gold and oil are in the red, but Bitcoin, that's little changed. Leaders to the upside in the Dow, Nike and NVIDIA, while UNH fell 1.2% and led to the downside. Among the main 11 S&P sectors, all were trading in the green, led by gains in consumer discretionary and tech. And in deal news, TPG and Blackstone offered $16 billion to take Hologic private and Salesforce to buy Informatica at $25 a share. Wrapping things up after earnings, AutoZone fell 3.4%. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type SQUAK, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
You drive till you're crazy.
It's the question that drives us.
This is the drive to the close.
The funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, coming up on about 18 minutes to go until we wrap up the trade on this Tuesday. You just heard from Charlie and Bill Maloney. We've definitely got an equity rally underway, although I've been kind of piqued by the global bond market, especially when you look at the longer end of the curve and just some concerns about what's coming, what's going on. So I think we have a perfect guest to kind of roll it all into one. Axel Merck is with us. He's President and Chief Investment Officer over at Merck Investments, joining us from Menlo Park, California. Axel, it's been a while. Good to be talking with you again. How are you looking at kind of the current global market environment?
Great to be with you. The
Big
reason
sigh.
I'm sighing is because how many hours do we have, right?
Fair enough.
I'll give you a few bullets, right? One is we're recovering from a volatility shock. Liberation Day was a volatility shock. We're recovering from that. We have all this trade talk, and in many ways, tariffs are the stick that Trump has to rebalance global trade. And then there are carrots he can give. Obviously, good news on the trade front. Carrots, deregulation would be tariffs. If you ask me, though, how I look at it, is I am of the opinion that there are some profound changes underneath all of this happening. And the reason I say that is when your baseline is, which happens to be mine, that President Trump ultimately wants 10% baseline tariffs, some punitive tariffs on top. It doesn't just impact the flow of goods, it impacts the flow of capital. And that is why, and that's what we're alluding to, I presume,
yes,
higher bond rates. Less money is flowing into the U.S. to help finance the deficits. And that's the prism through which I look at it, is, and a lot of noise around it. And by all means, if President Trump gives us lots of carrots, markets can go higher, but these stubbornly high rates are direct results of the trade policy.
Well, I love that you went there and, you know, trying to kind of figure out how much is noise, how much is actually action that kind of sticks around longer term. And I do think about the implications of a higher tariff environment and what it means for the U.S. as an investable or uninvestable market or less investable market. Having said that, Axel, everybody comes back, or a lot of people come back and say, well, wait a minute, where else are you going to go? It's the deepest, most liquid market, the U.S. Treasury trade. So where else are folks going to go? What do you say to that?
Well, again, we have a few hours to discuss that. First of all, noise may be the intuitive word, but there's, of course, a rational reason why the markets are reacting so violently, because these policy shifts actually have a real meaning. As far as investable, and deepest market, what happens when this global trade is impacted, it's a wrench into the system. It's not Moody's when the U.S. was downgraded said, oh, but still the U.S. is the one place there's no alternative. The alternative is fragmentation, that there is less trade, less liquidity. So I think that's what we have to watch out for. With regard to rebalancing, it's not like the good guys versus the bad guys. What we have in the U.S. is a little bit of a fiscal restraint, not much. I mean, there's not real austerity there, but compared to the rest of the world, Japan just offered some lifeline to business impacted by trade. Think stimulus. Germany wants to spend almost $1 trillion in both infrastructure and military spending. The EU would love to seize trade as an excuse to issue EU-wide bonds, have more infrastructure spending. So we have a fiscal stimulus in the rest of the world, and I think equity investors will take notice, and the US has been the place to invest in for so many years. Rebalancing, even taking the emotions out of all of this, rebalancing trade that favors the rest of the world is just a natural thing to come by here.
You know, we're talking to you on a day where we're seeing the equity market rally, partly on the result of the president essentially saying, just kidding about the 50% tariffs on the EU starting on June 1st. We'll push that to July to give more time to negotiators. And indeed, those negotiators, by all indications from the president, those negotiations are well on their way, and that's why we're seeing partly some excitement in the equity market today. In your view, how does the dust, when the dust settles after the tariffs are over, what does it look like?
Well, I mean, first of all, when I hear about improvements and whatnot, when it comes to negotiating with EU bureaucrats are many things, but they're not efficient and they're not fast. I mean, obviously they would like to have a deal, but that's much easier said than done. So when the dust settles, I do believe that President Trump would like to have 10% tariffs, which impact the global trade and maybe higher tariffs for China and whatnot. But he wants to have that sort of barrier to help the domestic industry. And so when the dust settles, well, the dust never settles. There's always the next thing. The next thing is the tax package. The next thing is the midterm elections. The next thing will be the next presidential election and whatnot. And so we will see this noise. We will see this rattling of the cage. And if one wants to rebalance global trade, I think a lot more emphasis has to be put on deregulation, on other incentives to invest, rather than just the stick approach. And we'll see much more of that. Whether that's enough to keep these markets going is of course, another question. The one area where we are active in, yeah, go ahead.
No. Just go ahead. What area you said that you're interested in?
Well, institutionally, we are in the gold and gold mining space, and that space, of course, has gotten a lot of attention. And I think it is in part because the rest of the world is spending a gazillion in infrastructure and whatnot, geopolitical risk, but also the kind of the incentives, if one wants to call them such, because of trade, help the price of gold. There will be an incentive to get the fiscal house in order, but we see that that's not really happening. Congress isn't suddenly going to do entitlement reform in earnest, but we might see more pressure on the Federal Reserve. The Fed, by the way, has their hands tied. They can't really do anything at this stage. Tariffs are a supply shock, which means they can't. But this idea that we are constantly late cycle and we're constantly thinking of the next recession is beneficial to the price of gold. And the cost of doing business around the globe is going up. Which means governments will spend more money, and that's ultimately erodes the purchasing power of currencies and is good for commodities like gold.
Axel, just got 30 seconds, and just to kind of piggyback on that, because you're dealing with kind of where to maybe invest. We do have a question from a listener who says, what percentage of one's portfolio should you have in currencies, gold, silver, crypto, including stablecoin? Again, just got about 30 seconds real quickly.
Well, I personally am on record for having a substantial amount, but it's all about the risk you can afford to take, right? The thing about gold is one kind of knows that the dynamics, although the correlation to real rates has broken down. With digital assets, we still don't know to what it's really correlated. Is it more correlated with risk assets or not? So be careful. It doesn't always go up. And equities are, of course, no sure bet either.
it's an interesting time. Axel, so glad we reconnected. Let's do it sooner. Axel Merck, President and Chief Investment Officer of Merck Investments out there in Menlo Park, California. Folks, you're listening and watching Bloomberg Business Week Daily.
This is Bloomberg Business Week Daily with Carol Nasser and Tim Stenovec on Bloomberg Radio.
All right, everybody, just under 7 minutes to go until we wrap up the trade on this Tuesday. It's a holiday shortened trading week. We do get minutes tomorrow from the Fed, from the last meeting, and then we get NVIDIA earnings. Why are you laughing at me?
This is the holiday week that you thought was last week.
I know. I know.
You were just like extra prepared.
I'm so off.
Oh, I thought today was Monday, so
My husband didn't even know it was.
I literally scheduled things that wouldn't really work today because I thought today was Monday.
It was crazy.
Yeah,
Even
really
like
weird.
going to the, he's like, it's Memorial Day weekend. Like, yeah, because it's
Listen,
early.
I'll tell you what. Having a 3-day weekend is pretty great.
Oh.
Just
yeah.
newsflash, okay?
I love when you do that.
I bet Mark was probably pretty hard at work over the weekend. Mark Gurman, that is. He
totally
manages consumer tech for the entire Bloomberg News team.
We just talked with him.
We just spoke with him. He has got a new story out about how Apple is planning a dedicated app for video games on its devices. It's seeking to sell gamers and developers on the idea that it's a leader in the market.
Listen, the world is becoming, it's all about gamification. And I just think about, various apps, like even we have added games, right? In terms of like the Bloomberg business app, excuse me.
Yeah.
So I just think, I know this is probably on a whole other different level, but I think it's an interesting place where users can tend to be sticky. And I think it can be super productive and super lucrative. So we'll see what Apple is going to do.
The new app will feature editorial content from Apple about new titles, offer access to the App Store's game section. It'll also promote Arcade. That's the company's $6.99 a month subscription offering. It will replace Game Center, an existing social network dedicated to this category that debuted in 2010 but never gathered serious momentum. I would say I am above average when it comes to my education on Apple.
Yeah,
and I've never heard of Game Center.
I was just going to say, I was like
Let's say
expecting you to be
did
like,
not gain serious momentum. I do not even remember that.
I no idea.
Let's see. As part of the gaming push, Apple has acquired Rack 7 Games. It's a two-person studio behind the popular Sneaky Sasquatch title. Whenever I walk by Carol's desk, she's just playing Sneaky Sasquatch. And I'm like, Carol, it's time to do work.
All right.
And she's like, hold on, I'm going to get a new score, high score in Sneaky Sasquatch.
That is not true.
Yeah, I don't know what this game is, actually.
I know you don't. Yeah. Listen.
Sneaky Sasquatch.
If you think about, it says by market share, the iPhone remains one of the world's most used devices for gaming, a category that has been central to the App Store since 2008. In recent years, developers have added high-end games like Resident Evil, Death Stranding, and Assassin's Creed. This is when I feel I'm lost.
So this is how it's described in the App Store. Live the life of a Sasquatch and do regular, everyday Sasquatch stuff like sneak around campsites, disguise yourself in human clothing. This is the game that you love?
Yeah.
Okay.
I thought you weren't going to tell everybody.
Okay.
About 2/3 of Apple's App Store revenue currently comes from games and in-app purchases. That includes tokens, levels, and other upgrades bought with in the titles themselves. Yeah. So I guess they're looking to that. So rather than other people's games, now they want to do more of their own games. Is that what this is about?
Listen.
So many questions.
Yeah.
So little time.
Services category and the growth that this category has seen since they established it, and the margins here are what, 70% or so?
Look at my Amex statement. How many app services charges there are?
Bundle it together,
Every
makes
month.
it stickier. You need an iPhone to do it. It also said it'll be available on the Mac, but just strengthening that ecosystem.
Yeah. Other new features could include AI-powered battery management and health capabilities. This is, I guess, when their new next version of iOS, right? This is some of the stuff that might come out. Hey, it just plays into, I guess, Apple looking for new revenue streams, right? And how to build upon what is an incredibly successful platform. I mean, how many hours do you spend on your Apple phone? No judge.
How many do you spend? Do you get the Sunday thing? Like what it tells you on Sundays?
I'm sure. Oh, do I get a? I don't know.
A report?
Yeah, I don't know if I get it.
That's a personal question. I know exactly the answer. I don't know if I want to say it on air.
It's a lot. It's a lot. So
and I've done a lot of things to try to reduce my time on it. I've hidden.
Hi, my name is Tim. I'm putting my iPhone down. No, he's not.
I know it's more than you because sometimes I have to call you to tell you that I texted you.
I do believe in putting these things down and taking a break. I really think it's important for my mental health and other people's mental health. Hey, stock's taking a leg up in these last few minutes of trading. Stick around. Heading over to our TV colleagues. The closing bell starts right now.
The closing bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Alex Steele taking you through to that closing bell. It's a global simulcast, and it starts now. Carol Master and Tim Stenovic join us in the radio booth. Scarlett Fu is off today as we welcome our audiences across all of our Bloomberg platforms, including our partnership with YouTube. 59.18 on the S&P 500. Alex Steele up 2%. The NASDAQ up 2.5%.
Yep, and there we go, guys. We keep climbing higher, bouncing off that 200-day for the S&P, Carol.
Yeah, I mean, look at it. We're seeing some buying into the close here. Quite a rally. I'm just trying to make sense of, again, what has really changed in terms of the fundamental backdrop.
Well, I guess what's changed is the EU and the U.S. are speaking, and consumers maybe were a little less stressed about tariffs, at least the portion of consumers who answered the questions from the conference board about how they're feeling about things right now.
I mean, you sound kind of skeptical.
Yeah, what's going on?
Well, look,
Tim?
you know, we talked to Mike McKee about this. He said, take this one with a grain of salt. And look, there were also some nuances to the data. People are still very concerned about the job market right now.
Yeah, I mean, look, the labor market outlook was certainly dour, continuing to deteriorate here. But shorter term, there were people basically saying, look, we're willing and able and ready to spend money right now. And at least in the short term, that's a positive. We made a lot of hay when that thing was going down.
Yeah.
I love making hay. But I think also the difference is when you have President Trump saying that maybe we don't have to make everything in the U.S., that gives some relief to some of those retailers, right? We're not going to be making T-shirts here. So maybe there are more exemptions that are coming down.
All right, well, we get the closing bells here in New York on this Tuesday afternoon. Remember, of course, Monday was a holiday here in the United States, so it gave folks a little bit of time to kind of parse some of the negative news that came out on Friday and coming in today with some relatively positive news. The Dow Jones Industrial Average up more than 700 points or 1.8%. The S&P 500 up more than 100 points or 2%. The NASDAQ Composite up about 460 points or 2.5%, while the Russell 2000 also adding about 50 points or 2.5%.
All right, just taking a look at the S&P 500, folks. You've got most names in the index higher today, 469 to the upside, guys, and so the remaining, for the most part, to the downside. So, yeah, much more of a risk-on trade today.
All 11 of the S&P sectors were in the green on the day, led primarily by consumer discretionary stocks and tech stocks. Both of those indices up about 3% on the day. The laggards, relative laggards, we should point out, energy, utilities, and consumer staples, and they lagged because they were only up by 1%.
Where's Scarlett? I'm not used to, like, Scarlett not doing the IMAP.
Wow, are you dissing Romaine? I thought his stuff was just fine. He delivered. He delivered.
Wow.
He did it well. I just was like, I was a little confused.
Should I have said the spinach pie? Or one of hers?
All right. Now it feels like it should. All right, let's get to some of the individual gainers. All right, we got Okta earnings. Excuse me, I'm busy. I'm actually working here. Okta out with first quarter adjusted EPS, 86 cents a share. The estimate on the street was 78 cents, so coming in stronger than expected. First quarter revenue, folks, $688 million. That too is coming in better than expected. $680.6 million. Stock's down about 11%. So. Here's the outlook. Second quarter revenue, $710 to $712 million. The estimate is $709.8 million. Investors not loving it, guys, though. Stock down about 10%, so there's got to be a little bit more to it. So we'll wait for some more headlines to come across. In the meantime, let's do some of the individual gainers. Hologic, definitely on that list, up about 14.5%, up 25% at its highs today, but finishing with about a 14% gain. We also saw a trading pause. Top gainer in the S&P 500, TPG and Blackstone, making an approach to take the company private, offering to buy the group for more than $16 billion. This is coming from the Financial Times, citing unidentified people familiar with the matter. So definitely a standout there. U.S. Steel, also an outperformer. That stock up about 2% in today's session after CNBC's David Faber said that U.S. Steel Nippon deal is going to close probably very soon. There's been a lot of speculation after last week. There was reports from the president about a partnership, but nonetheless, we're expecting maybe some news on Friday, so we'll see where that goes. Warner Brothers Discovery, guys, it was up about 6% in today's session. I'm not sure that there was a clear catalyst. Benzinga writing that the video game adaptation of The Last of Us has been one of the most watched and anticipated series on HBO and Max since the release of its first season in 2023. So the second season's over. Everybody's looking at those viewership numbers, so maybe that gives the stock some juice. And I had to do this one. This is kind of a gift for you, Tim. Vertical Aerospace, eVTOL is the ticker, EVTL. Up about 14.5%. The company says it made European aviation history with the first ever piloted flight of a winged electric vertical takeoff and landing eVTOL aircraft in open airspace. So there you have it.
Cool.
I had to go for 4.
I just want to know how loud it's going to be. How loud is it going to be? That's the question I have. Also, pickings are really slim when it comes to decliners today, guys, on a day where you see such broad-based rallying. Bear with me, though. We got a 13.6% decline to ADRs of PDD Holdings. It is the parent company of Temu. The stock here, or the ADRs here in the U.S., fell as much as 18.4%. The company's quarterly sales and profit estimates, though, did highlight the impact of trade tensions between Washington and Beijing on its business. The company does face intensifying competition in the domestic China market by the shifting trade policies from the Trump administration that have hurt Temu, and will have to make pricey investments to adjust its business model. That can weigh on profitability in the short term. And speaking of the Trump administration, the president's Trump Media and Technology Group, the company that he owns a good portion of shares, shares fell today by 10.4%. The company did agree to sell around $1.5 billion in stock and $1 billion in convertible bonds to buy Bitcoin for its treasury. If that sounds familiar, it's because it's exactly or pretty similar to what Michael Saylor has done over at the company formerly known as MicroStrategy, now called Strategy. Shares fell as much as 12% earlier in the session, but again closed down by about 10.4%. The company has about $760 million in cash to defend against the financial institution and create synergies for subscription payments and other transactions. Finally, talking about Severa Pharmaceuticals, its pharmaceutical company fell as much as 33% in the session, down 32% on the day. This after the FDA said the company's drug application for Molbreevi to treat patients with a rare lung disease was incomplete and needed to be refiled.
All right, I'm going to the bond market, guys. That's where the action continues to be. We saw buying all across the curve. And look at that back end, down by about 8 basis points. That was the biggest drop in yield since March. So take a look at that. Now, we had that 2-year auction. It was all right. I mean, the bid to cover was strong, but so was the high yield rate coming in at 3.95%, meaning that, like, there are buyers at what yield. They need that juicier yield in order to buy. But a lot of this was dictated by what the finance minister in Japan talked about, potentially reducing those long-term issuance within the market. And we saw a global bond rally, particularly in the back end, because of that, guys.
All right.
Yeah,
go ahead.
Go ahead, Carol. I don't want to interrupt you.
Yes, you do. I just want to point out a headline: Vail Resorts reaffirming its fiscal 2025 guidance. So another thing coming in. Hey, we're going to go to something a little bit lighter. Captain America, you know, Chris Evans, that kind of cute guy. Apparently he's putting, can I say that? He's putting, thank you, Finley, picture.
Look at that little salt and pepper going on.
He's putting his LA home on the market for just under $7 million. It's nearly double the $3.5 million, Tim, that he paid for it back in 2013.
3 bedrooms. Nice. There's an ADU.
I'm sorry, how many?
Only 3 bedrooms?
3 bedrooms. There's an ADU. Okay. Accessory dwelling unit. It's got a separate entrance. It's got a bedroom and kitchen. There's a gym. That's what the ADU is now, but it could also be used as a guest house.
Yeah.
Yeah, stuff is expensive.
I love this
in this
story
area
because it really makes me feel better about living in New York City. So $7 million for a 3-bedroom house.
Yeah, but it's a
ADU?
4,600 square foot house. I guess there's just a lot of entertaining space, maybe.
I guess. I mean, some people are like that.
Maybe the bedrooms
how
are
many
huge.
bathrooms? If it's less than 6, I'm not interested. Well, anyway, if you are the kind of person that can actually afford to spend $7 million on a 3-bedroom house in Los Angeles, you also might be the kind of person that can afford to hire your own private pilot. Interesting story on the terminal today about Starbucks looking for a corporate pilot to pilot their corporate jets. They're offering a salary range of $207,000 to $360,000, and the ideal candidate must have experience with the G6 and G7 type Gulfstream models.
Now, I was surprised at how juicy that price tag seemed, but you had Romain being like, what do you mean it should be higher?
Yes.
And I was like, I don't know, 360 feels super high, no?
But this also requires you to assist in handling passengers' bags, establishing security when they're away from home base, not to mention the ability to travel extensively and on a dime. Alex, I mean, if you work for an airline, if you're a senior pilot in an airline, you're making this much money. You had a set schedule. You have a lot more flexibility. But now I got to be, what, the Sherpa for these Starbucks executives for what? A measly 207 to 360?
But then you're also flying non-commercial jet.
I can't afford to buy a house in LA on that.
Versus like a huge plane, which delays and issues. You're not in your own private airport. I'm on board.
Did you see it also says that the captain would serve as a, quote, Starbucks ambassador both at home and
Exactly.
abroad?
This is a lot. They're asking a lot for this job description.
Well, maybe you get a
here.
bonus. I don't know. Say you have bonuses?
I don't know.
Act with
Now, the good part is I assume you get a lot of free coffee, right?
Yeah, I was going to say, I'm guessing they serve Starbucks on board.
I'm sure I would hope
Just
so.
an adventure of that.
Yeah. Do they have like their own barista on the plane? That would be cool.
That would be cool. Probably not.
Do you like when you go into Starbucks, you just put on the cup, Captain?
I don't go to Starbucks, but thanks.
I know you don't.
Nice. Which somehow circles back to
I don't
Chris
drink
Evans.
coffee, so it's not a commentary on Starbucks. But
All right, that's a wrap.
drinker.
Off to
This is Carol. It's all heart.
All right, that's a wrap for cross-platform radio, TV, YouTube.
Goodbye, Finley.
Goodbye. They are, of course, finishing up on television. Continuing, Alex and Romain and Tim and I are going to go back to Bloomberg Business Week Daily. Guys, we will see you same place, same time, same place tomorrow.
Same flight.
Yeah, same flight. No caffeine.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
It is Bloomberg Business Week Daily. That is Carol Masser. I don't know.
Right.
You know, there was an opportunity there. I know you haven't been watching the rehearsal on HBO/Max/HBO Max, the Nathan Fielder comedy.
No, I haven't.
I'm not going to give anything away
Okay.
about the second season because it's very good.
Okay.
I don't think Mike Mike, did you see it? Have you seen it?
I have not seen it.
Okay, Mike hasn't seen it either. All I'm going to say is Nathan Fielder has the opportunity to do something very funny for season 3 if he were to apply to this Starbucks
Is
job.
it a good series?
I think it's fantastic, but it takes a unique view. There are some people, Cece, for example, said, one of our producers said, I was talking to her about it, she said, I can't watch more than 10 minutes of it. So it's like, it's very polarizing.
Yeah.
But it is among the top series on HBO because you go every day and you like look at Max, what is trending, and that's certainly one of the top shows.
You know what also
Yet I can't find anyone in here to talk to me about it. I don't know what that says.
Well,
because I need to talk to someone about
we
it.
have someone who can talk about something that some would also say is rather polarizing.
And that is cryptocurrency. DJT, it is Trump Media and Technology. It's the media and tech company. Maybe it's also a Bitcoin company now. I don't know. Shares are down today by 10.4%. It is the company behind Truth Social. It agreed to sell around $1.5 billion in stock and $1 billion in convertible bonds to buy Bitcoin for its treasury. We got Mike Regan, Bloomberg News senior editor for crypto. Also, digital payments team leader. He joins us here in the Bloomberg Interactive Brokers studio. You know, I see this news and I think Michael Saylor Strategy, the company formerly known as MicroStrategy, that's among the thoughts that I have.
Yeah,
Why is everybody doing this now?
I think that's a safe thought to have. I think, this is the latest of several companies trying to emulate the success of Michael Saylor and MicroStrategy by simply selling secondary offerings of shares and convertible debt and using the proceeds to buy Bitcoin. It's interesting, the share reaction to Trump Media doing this today, though, as you pointed out. Down about 10%. I mean, the reason these companies are doing this is because Saylor's MicroStrategy, now known as Strategy, that stock has just far outperformed Bitcoin, even though
because it's a leveraged bet on Bitcoin.
It's a leveraged bet. But here, with Trump Media, a similar idea. You sell those convertible notes to introduce some leverage to the idea. So it's a bit of a head scratcher why sometimes these companies, when they make this pivot, the stock market loves it, and they bid the shares up. They're not loving it with this. The only thing I can think of, my one guess is that, Strategy is solely a Bitcoin holding company. There is still a small software business attached to it, but it's kind of a melting ice cube. It's not that big of a business. And a lot of these other companies that have done similar things were either like 21 Capital was set up by this guy, Jack Mallers, to do exactly what Strategy's doing.
I'm not going to get into the politics of this here. I think you could find people. I've spoken to many people, Mike, who say there's no problem with the president being so close to crypto. And I've spoken with many people who say there's a huge problem with the president being so close to crypto. What I am going to do is remind everybody that President Trump has 52% of shares of DJT. It's a market value right now that he has of about $2.65 billion. And he's also helping to create policy around these digital tokens. It's just one thing I think for people to keep in mind when thinking about this company.
Absolutely, yes. Yeah, another one of Trump's, business interests still lingering, despite him returning to the White House. And, we could talk all day about the conflicts and the criticisms.
I guess my question is, what is Trump Media? Like, what is this company? What is it supposed to be? Does it make any money? I'm looking at the FA on the Bloomberg. I mean, I'm just, if something gets it to a space where it becomes a money-making company, a profitable company, but I'm just trying to understand.
Yeah, so the main business as it stands now is
loses money, right?
Is Truth Social. Yes, it does. Yes. I'll call up the financials here. The last it's consistently loses money. It has a lot of ambitions to expand into other areas besides just the Truth Social, including, offering ETFs, that sort of thing, and get more involved in finance. So it is a bit of a head scratcher why some of these are richly rewarded by the stock market. This one is not being rewarded. My guess is that maybe some of these shareholders were hoping for something more tangible in the way of, spend your money growing True Social, get into these other business lines that they want, rather than just becoming another one of these sort of Michael Saylor copycats.
I mean, Mike, is it a fair assumption, whether it's Michael Saylor or whether it's Trump Media and tech company, if they are looking to raise money to buy Bitcoin, there's a limited amount out there? And that if you have multiple people kind of going after it, and then you have an administration layered on top of it that is creating maybe a much more positive, regulatory environment, that there's going to be more people chasing it, that the price is going to go up.
Yeah, absolutely. I mean, it's certainly good for Bitcoin itself, but you're absolutely right. I think the market is trying to wrap its head around how much capital can be raised in equity offerings and convertible debt offerings to do this very similar strategy. That Jack Mallers' company, 21 Capital, is partnering with a SPAC, a Special Acquisition Corp, sponsored by Cantor Fitzgerald, to basically do the same thing with some backing from Tether and SoftBank. So there's a lot of big players looking to sort of emulate the Michael Saylor strategy. I think at some point it becomes a crowded trade. It becomes oversaturated. It's so easy to buy Bitcoin in the ETF form now, and there's no guarantee that the stock will outperform the way that strategy has. They've sort of claimed this ground as the equity markets version of a levered up high beta Bitcoin fund. And so it's going to be interesting to see, because there's a whole list of companies doing very similar things, just announcing plans to load their corporate treasuries up with Bitcoin, and in many cases borrowing the money or selling shares to do it, diluting their own shares. And I think as we go on, it's going to be interesting to see how many actually are successful about it, at least from the perspective of having this outperforming stock price.
I'm just looking at the CRYP Go on the terminal. It's like the crypto dashboard. You can get news, you can get prices instantly. A $2.18 trillion market cap just for Bitcoin. The next largest crypto by market value is Ether, and that's at about $325 billion. Yeah. It really seems like Bitcoin is the runaway story this year.
It really has been. And, it's that dominance has grown over the years. I mean, Bitcoin, if you remember, one of the biggest selling points of it is that finite supply of Bitcoin. Most of it's already been mined. There's only, I think, about 1 million Bitcoin left to be mined. And not every cryptocurrency has that sort of cap on how many tokens will ever be issued. So I think really, people used to compare it to gold. It doesn't quite perform like gold the way they expected, but it does share that idea of a finite supply, whereas a lot of the other tokens don't have that cap on the supply. So I think that's Bitcoin's real secret weapon.
Fascinating, that. Right?
Mike Regan.
Something different. Yeah. Mike Regan, thank you.
Thanks for joining us, Mike. I got to speak to Mike twice today on Bloomberg Crypto and it was great on Bloomberg Crypto and on Bloomberg Business Week Daily. Mike Regan, Bloomberg News Senior Editor, Crypto Digital Payments Team Leader. Coming up next, we are cooking steaks with the CEO of Omaha Steaks.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. Back to work Tuesday. It was an up day for the Dow, the S&P, and NASDAQ. Wall Street kicking off the week with a big rally in stocks as consumer confidence rebounded sharply, while the U.S. and European Union sped up trade talks. S&P 500 index today advanced 118 points. That was a gain of 2%. Dow Jones Industrial Average up 740 points today, up 1.8%. NASDAQ up 461, up 2.5%, and the Bloomberg Mag 7 index up by 3.2%. Your 10-year, 4.44%. The 2-year, 3.98%. Gold up down $39 the ounce, 33.04. That was a loss for spot gold of 1.2%. West Texas Intermediate crude down 0.8%, 61.06 for a barrel of WTI. And Bitcoin now just below $110,000, up 0.2% today, 109,821 on Bitcoin. Advanced Micro Devices shares higher today after HSBC upgraded the chipmaker to hold from reduce. AMD today up by 3.95%. And Southwest Airlines shares higher after Jefferies upgraded the company to hold from underperform. Southwest today up by 5.55%. And this Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, see if your company qualifies at oracle.com/Bloomberg. Recapping S&P today surged 2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. Well, this weekend was the unofficial start to summer. Perhaps you were one of the millions of people who took to the grill.
Nope.
You weren't?
No, we went out for dinner.
You know, it was a little chilly in New York.
It was a little chilly. It was a little, yeah.
Oh, we were grilling on Saturday.
Were you? Oh, nice.
Oh, yeah.
Okay.
Yeah. Nate Rempe hopes you were grilling an Omaha steak or several. He's president and CEO of the privately held company, more than 100 years old. The company is. Nate joins us from Omaha. Nate, good to have you with us. It's good to have you on the program. We've been excited to speak to you about a range of topics. I want to start just with the fact that you're privately held, you're more than a century old. We don't have a lot of numbers to go on. We are Bloomberg. We need some context here. What can you tell us about the business, sales, what direction they've been going in? What can you share with us?
You bet. First off, in Omaha, we grill no matter the weather.
Okay,
so
it's good to know.
Get that right out of the chutes. So we are 107, almost 108 years old, born and raised in Omaha, Nebraska. We're pushing upwards past $600 million in top-line revenue, about 2,000 employees, and we spike up to about 6,000 during the holidays when we provide America, the best gift, which is Omaha Steaks filet mignon.
So where is the beef coming from? Because on your website, I noticed you do have a section, sort of the higher end stuff that is imported from Japan, right. It seems like. Other than that, is it all from the United States?
It's actually, Wagyu is not imported from Japan, actually. We actually call it Wangus.
Oh, okay.
Which is largely, in the United States, most of the Wagyu consumed is a sort of a hybrid between an Angus and the Wagyu.
So forgive me, is it still considered Wagyu if it's not from Japan?
Oh, yeah. Yeah, for sure. Just because of the breed, you sort of interbred that with the Angus to get a more Americanized version of that. But our beef comes from the heartland. I mean, I'm talking to you from Omaha, Nebraska. This is beef country. And, on the top of mind lately, has been the topics of tariffs. And when you source all of your beef from the U.S. right in the center of the country, you can really have a competitive advantage in protecting your customers from the impacts of things like tariffs. And Omaha Steaks, given the fact that we're 100 years old, is super vertically integrated. So from the sourcing of the raw material through manufacturing, packaging, marketing, IT, all the way through fulfillment and logistics, we control that at every step in the process, and that gives us a couple benefits. One is that customer experience can be very controlled to ensure that we have an absolute fabulous experience from not just from first bite, but all the way backing up to the shopping experience, the marketing experience, exploring what products you might want to enjoy from Omaha Steaks, all the way through to when that cooler shows up, perfectly frozen with ice still in the package.
All right, Nate, I got to ask you, because I feel like every time we go out for dinner, you want to buy, I'm using steak broadly, but there's obviously different kinds of cuts and so on and so forth. But it's expensive. You're talking 35, 40, 50, 60. Why is it so expensive? And I was just looking, beef prices have gone up again this year, or they're up. So what's going on in the beef market?
Yeah, it's largely, it's pretty simple, Carol. It's kind of supply and demand. So consumer demand has really kind of stayed strong despite, all of what's happening around us in the macroeconomic environment. Cattle supply has dropped. In fact, we'll be about 4 million head lower in this year versus 2022. And thus, price is sort of increasing. So, all those factors are really what's behind the price of meat increasing because, the cost of food has been increasing for quite some time. It's not just, kind of this, very recent event. And in going out to dinner, when you told me, you go out for a steak, I think if you think back to 2020, one of the things that we learned as a country is how great it was to have dinner at home with family. And that, when you do that, that doesn't mean that the experience or the quality has to drop.
Right.
And what I'm arguing is that I can bring the quality and the guidance and the experience of the best steakhouse in America to your kitchen. And you can do it without waiting in line, without driving, without tips, without, maybe variable service. And you can be the hero in the kitchen as opposed to the steak restaurant.
As long as you don't overcook it, which has happened.
It depends. I mean, we say it on my steaks.
Medium rare
as
on the
long as
rare
you're eating
side,
steak.
totally.
Well, to Carol's point, beef prices recently, just in the last few days, reached a record high in April. How much of your price has gone up over the last year?
Actually, we have held our prices static for about 3 years. And again, we're doing that because we're able to control, and I can't really overstate how important it is to control the controllables. I mean, when you're operating a large business, things that come at you from the sides that cause impact to costs are ultimately what drive consumer price up. So we've been able to really control our controllables and offer that benefit to our customers. Now, there really are a number of things that America can do to manage their costs of protein. It's like anything else in economics. There's a trade down opportunity. So if you were maybe used to having a Tuesday night filet mignon, we've seen some Americans go to the top sirloin. I happen to love the top sirloin. I think it's an underappreciated, maybe underloved steak. It's a Tuesday night steak. It's beefy. It's very healthy, more lean. And so there is a trade down happening there because protein really is an important component to our diet and is a key cornerstone in maintaining a healthy diet. And so trading down is one of them. Like I said, eating at home is another. Investing in products that have that high quality, but still that experience at home can be a great one.
All right, first of
one
all,
thing that I think, go ahead.
I was going to say, full disclosure, we cook a lot at home, so it's not like I'm eating out all the time. I'm just kind of blown away by the costs on menus, but the same thing even when we, buy, it's just kind of expensive. Why are herds down? You said herds in the U.S. are down by 4 million heads, lower than 2022. Why is that? Is there not the land?
Number of factors.
Yeah.
Number of factors, Carol. Things like drought, the environment in which the cattle are being raised certainly affects the size of the herd.
Right.
But another phenomenon that's really interesting that I think you'll also find interesting is something called heifer retention. So when demand for beef is high, there is motivation to harvest the female animal as opposed to leverage that animal to generate more herd. And over the last number of years, that has been happening. And so as heifer retention drops, the number of calves entering the market or entering the environment drops as well.
I see.
And so the build of the herd doesn't really happen over time. And we've been dealing with that reduction over the last number of years, which is a contributing factor to supply and thus price.
Nate, you also, it's known for steaks, but you guys also do chicken and pork, seafood, you do desserts, wine, gifts. Some of your seafood is imported from outside of the U.S., correct?
It is, yes.
So how have you been, like Argentinian shrimp, for example, how have you been able to control prices there? You say controlling the controllable is what's important, but how much are you getting hit with tariffs on that stuff?
There's a little bit of that there. I tell you, one of the benefits you get from being a multi-decade business is we have multi-decade supplier relationships. And so, we can have conversations with them and we can talk frankly about the fact that, the Omaha Steaks and, inter-supplier name here, this is about the long term. We've been sourcing from you for 20 to 30 years. Help us overcome this blip. And a lot of times we find that our suppliers will step up and help us keep those costs in check. Largely, I think, we've done a pretty good job. My team has done a fabulous job of anticipating the impact of tariffs there.
All right. While we have you, can we talk about Nick and Kate, or should I call it Nate?
Sure.
Tell us about Certified Tender. It was a romance novel. I believe it started as an April Fool's joke.
What are you talking about?
I have to tell you, we were kind of reading, there was a great article that kind of put it all together. We were reading some of it out loud in the newsroom. This seems like it was an idea that really took off. Just got about a minute or so left here. How successful did this turn out to be, and how did it come about?
It was so fun. We've done April Fool's events over the last number of years, but we had a super talented copywriter internally that agreed to take on writing Certified Tender. So it was literally written by a copywriter here at Omaha Steaks named Michael. And I don't know if you have the opportunity to read it, you totally should. It's got some fun Easter eggs in the book that talk about the history of Omaha Steaks. Some of the names and some of the dates and things correlate with the history of the company, and it just blew up. The book looks great. The content and the creative. It's just a neat, fun way to engage with our customers, and I think it sort of speaks to the culture and the innovation and the desire to have fun.
That Meet Cute collection, because this was a promotional material for...
That's MEAT.
MEAT, Meet Cute collection, $99, date night themed box, filet mignon, fries, Cabernet Sauvignon. 20 seconds left here. How successful are those?
Hugely successful. It's who doesn't want to have a date night? It's the perfect date night. You'll have some wine, have some great Omaha Steaks, the filet that we provide our customers is unmatched. It's literally certified tender by the USDA. So it's about the most tender steak you can buy. And then you curl up with a good book. And that book just happens to be by the company that provided the steak and the wine.
All right. Come back. We got to continue this conversation. Nate Rempe, President and CEO of Omaha Steaks.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ all surged today. Wall Street kicked off a holiday-shortened trading week with a rally in stocks as consumer confidence rebounded sharply, while the U.S. and European Union sped up trade talks. The Dow was up today by 740 points, up 1.8%. S&P 500 index, keeping it all in context, up 118, up 2%. NASDAQ was up 461, a gain there of 2.5%. The Bloomberg Mag 7 index up 3.2%. 10-year 4.44%. The 2-year 3.97%. Gold down $39. The ounce down 1.2%. West Texas Intermediate crude 61.12 a barrel, down 0.7%, and Bitcoin little changed, up under 0.2%, 109,805 on Bitcoin. So it was an update on Wall Street. Axel Merck is the president and chief investment officer at Merck Investments. Right here on Bloomberg Business Week Daily, he told us investors cannot be waiting for the dust to settle.
The dust never settles. There's always the next thing. The next thing is the tax package. The next thing is the midterm elections. The next thing will be the next presidential election and whatnot. And so we will see this noise. We will see this rattling of the cage. And if one wants to rebalance global trade, I think a lot more emphasis has to be put on deregulation, on other incentives to invest, rather than just the stick approach. And we'll see much more of that.
Axel Merck of Merck Investments, interviewed right here on Bloomberg Business Week Daily. The next big event, and it will be big for investors, is going to be the NVIDIA report after the close of trading tomorrow. NVIDIA shares ahead of that report, up now by 3.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Do appreciate it. A lot going on in the world of higher education. President Donald Trump's administration is moving to cancel all remaining federal contracts with Harvard University, making the latest escalation of its battle against the oldest and richest U.S. school. Also this afternoon, we learned that Secretary of State Marco Rubio has ordered U.S. embassies across the world to stop scheduling interviews for student visas. This is the Trump administration ways stricter vetting of applicants' social media profiles. We got Janet Lauren with us. She's Bloomberg News higher education finance reporter. She joins us here in the Bloomberg Interactive Brokers studio. I want to start with the Harvard news. What does it mean if all of these federal grants get canceled for Harvard?
So the latest today was about $100 million in contracts. Previously, I think it was like $60 million in contracts had already been canceled. But that doesn't even count the grants, which are over $2 billion. So the government contracts with universities like Harvard and Yale and other schools and the University of Texas for research, basic research and other things. And they're often multi-year contracts. Sometimes you have other universities as subcontractors, and those are now gone. And I suppose in theory, the government could, in another round, choose other universities to perform these research.
So this is what Mike would help. This is what I'm trying to understand, Janet. Is it just Harvard and a few universities being targeted, or is the government saying, none of you need this money, why are we supporting? Or is it, hey, Harvard, you've got a more than, $53 billion endowment. You don't need money from us.
So it's a little bit of all of the above.
Okay.
So you remember earlier this year, a bunch of grants were canceled because they had diversity terms, DEI terms. So a bunch of schools saw grants canceled in that. That's one realm. And then there was the reimbursement rate that was decreased. So Harvard and other schools have very high reimbursement rates that went down to 15%. So there's all these things that are going on at the same time. The NIH changed the rate, the Energy Department, a bunch of different federal agencies, and schools would have to make up for that. Now, Harvard has announced that they would put $250 million towards research. They say they already contribute $500 million annually towards research. Well, what does that mean? So let's say the federal government gives you a contract to do these this research project. you're in a lab, you have to pay the lab assistants, you have to buy beakers, you have to buy a pen that's associated with these things. You know, people work there, you have administrators, you have graduate students, and graduate students, especially in the science fields, you know, may come from foreign countries, and they are paid as graduate students to work on these grants through federal money. So when you hear, it's all interconnected, and the bottom line is the federal government has huge relationships with private universities. They give them student loans. They give them Pell Grants. They allow, the federal government allows foreign students to come here, and they track that. As my understanding is, this was after September 11th. Some of the hijackers were here on student visas, and it goes back, decades, that they have to have a better sense of who is here. So Harvard has 10,000 people in it from other countries. Most of them, almost 7,000, are students. But there's other people who come as fellows and other, researchers and their families.
So taken together, what do all of these moves from the Trump administration mean for Harvard as a university, a place of research, and also for its bottom line? Does Harvard shrink as a result of this? Does Harvard dip into its endowment as a result of this? Does Harvard raise tuition as a result of this? What are the implications?
Well, it's nowhere far, it's far from being over. And I think...
The conflict?
Yes.
Okay.
And Harvard, this is a negotiating tactic. And Harvard at some point will decide they want to negotiate. And, as we've talked about before, they have said, we don't disagree with the administration on some points, that students feel uncomfortable talking in classes. Alan Garber, the president of Harvard, talks about this a lot, that he doesn't want students to go into a class and feel like their professors all have one viewpoint. And if you don't have that viewpoint, you're not comfortable speaking in class or participating in life, or you're excluded. And he recognizes that as a problem. And he has not been shy about talking about things they're trying to fix. What Harvard does not agree with is the federal government making demands.
It's interesting. Like, I'm listening to you talk, and I'm like, the government for so long, right, went to anti-discriminatory practices. And you do wonder if that is indeed happening at universities when we all talk about this, right? Academia is supposed to be a place where all kinds of thoughts, controversial or other, are kind of welcomed, and you discuss it. You don't have to agree with it, but you talk about it. And for the most part, every point of view, if we really believe in freedom of speech, right, should be welcomed.
Well, and that is what the Trump administration is saying is not welcome. It is one political viewpoint. We talked about this in the story I wrote in December, when professors, they didn't say we're canceling classes the day after the election, but it was pretty clear that people were unhappy with Trump being elected president. And that's how he's talking about Harvard is a political entity.
Yeah.
And that's why they deserve their tax status removed. And that is their thinking.
As I've said before, I think there are a lot of organizations in the United States that could be considered political that have tax-exempt status, like religious institutions, for example. And I'm just curious if this could potentially legally open up a can of worms. If there's a church that's backing a certain political candidate, you get a president in there who doesn't agree with that, they could revoke that church's tax-exempt status.
Yeah, I mean, we're in such an area where nobody thought any of this was really possible. So it's not clear what the next step is going to be. But these are negotiating tactics, and Harvard is seeing the brunt of the federal government saying, look, we have a lot of leverage. We control a lot of money.
Yeah.
It's a money story.
It is a money story, right? Almost every story, I feel like it ends up being a money story. But you do wonder where it's going to go. Does it broaden out? And this is what is kind of interesting. How much is Harvard specific versus a broader view on academia in America? I just think it's interesting because we think about, right, the fabric of this country, right? Some of it is international students. That's a big part of kind of who we are.
Well, and Harvard is the big prize. It's the oldest, it's the richest. We write about money and power. And if you want a symbol that says money, power, and prestige,
that's it.
That's
Harvard.
it.
Janet Lauren, thank you so much, and thanks for all your reporting. Bloomberg News higher education finance reporter right here in our studio. Coming up, a check on stocks on the move. some of those, how they closed on this Tuesday.
listening to Bloomberg Business Week Daily with Carol Massar and Tim Stenovec on Bloomberg Radio.
All right, everybody, a holiday shortened trading week. Of course, we're just back from the long holiday. We did have a rally on this Monday. It'll be an interesting week. We've got NVIDIA earnings, Fed minutes, so we've got a read on personal spending and income and spending later on in the week.
And there's one more thing big happening. PCE.
PCE inflation.
Yeah.
Or not.
Yeah, we'll see. The Fed's preferred measure.
That is true. Fed loves it. They go home and they're like,
the Fed loves it.
They go home and they're
Mike
like,
McKee loves it.
I love this measure of inflation.
Who doesn't?
Who doesn't? I'm Carol Massar along with Tim Stenovec. Let's get a check on some stocks on the move today. We're joined by Bloomberg News cross-asset reporter Emily Grafeo in studio. Okta out with earnings.
Yeah, the stock is really getting punished in the after hours. It's down about 11%. They reported earnings after the close. So we'll see if the losses hold into tomorrow's trade, because they honestly beat on a lot of metrics, but it seems like investors are focused on this second quarter forecast for current remaining performance obligation. They are forecasting $2.2 billion to $2.21 billion. That was versus estimates of $2.23 billion. I don't know. They seem
hairs.
Like it's kind of splitting hairs, Carol. They actually beat on a number of other metrics for their forecast in the current quarter, but investors are, I guess the bar was really high for this.
It was. Stock's up 60% year to date.
Right.
What?
My mouth is agape.
Pourquoi?
Vail Resorts.
Oh, you
some
wanna go
major
there?
news.
Yes.
I thought this was a mistake in the terminal because it says Rob Katz. is chairman and CEO of the company now?
Yes, so they reappointed Rob Katz as CEO, succeeding Kirsten Lynch, who has stepped down from the role. The stock is up 11% in extended trading, which is never a good thing when, like, the old CEO,
It's gotta feel bad.
It's gotta feel bad if you're that CEO, but this stock has really been plagued by a lot of trouble.
This is the guy who...
He used to run it, right?
He used to run it. Yeah. He was there for more than a dozen years, and he stepped. You and I have interviewed him several times.
Right? Okay.
He stepped away from the role. I mean, I thought he was retiring.
Yeah.
He's the guy who created the Epic Pass. He has probably done more to change the way that people pay for skiing in the U.S. Than anybody else. That was more than a decade ago when he did that. And it created this sort of arms race and some consolidation within the industry. And I guess he's coming back, which is, I mean, he did a lot. He moved the company's headquarters from Vail to Broomfield, Colorado. He bought mountains all over the country and created partnerships all over the world with mountains. I don't know what, I mean, that's pretty surprising. This is surprising to me. I thought he was done. I thought,
yeah. I mean, I guess that's sometimes what you see companies do. They bring in, you know, someone who had worked in the past. I mean, when you look at Vail Resorts stock, it's down 19% year to date. I imagine actually if you go back a little bit further, it's down even more. Let's see, like over the last 3 years, down 40%. This company's had to deal with the Epic Pass, like you said, Tim. They obviously own it, but that's completely changed the business of skiing.
Yeah.
It's changed the skier experience. They had to deal with a wage strike in Park City in December.
Environmental impact.
Environmental impact and how that, like how less snow kind of changes how people approach this sport. So at least for right now, in the aftermarket trading, this is good news for the shareholders.
Tim, because